Greetings, members, one and all of the Salivation Nation, inflation or deflation, and gold. Let's explore. Yes, those two things are coming in one form or another, and some argue that we'll have deflation before inflation. We're not really sure exactly how that's going to play out, but both will probably be positive for gold. And some may make the argument that a deflationary period may actually bring the price of gold down. And I think that's somewhat true, but we'll talk a little bit about that as we explore this topic about gold and its reaction to inflation or deflation. Let's take a look at this article here from Kitco that talks about it. Markets most likely to see extremes, but gold price will benefit, says the World Gold Council in this article from Kitco. Before I start, I would encourage you to press that like button. It helps the channel, helps to get the word out on this topic. I try to cover different aspects of the precious metal markets and how economy and the like and sentiment, both psychological and business-wise and financial and politics, can affect the price of gold and silver. With the COVID-19 pandemic, markets will likely see extremes. Whether it will be a deflation, inflation, or both, gold prices stand to benefit, according to the World Gold Council. Investors may choose to hold gold in both deflationary or inflationary environments, which is what Juan Carlos Artigas, who is a WGC head of research, told Kitco News. When inflation expectations increase, investors start to look for a hedge against inflation. And this is why you always hear me say that, you never hear me say, that I will see gold as a hedge against inflation, because I believe it's also a hedge against deflation as well. Gold historically tends to outperform other assets in a period of high inflation, he said. In a deflationary period, cash tends to be very useful. Gold may still be functioning, even though it's not a currency in itself, or that it trades as a currency. It functions as a de facto currency, preserving capital, especially in an environment where the money supply is increasing a lot. If you combine it with the fact that interest rates are at extremely low levels or negative, it signals that gold could be used in that environment. And that's true. And when you think about it in terms of the price of goods and services, if they go down, gold is less likely to go down as much. These two environments are the most likely scenarios. Artigas pointed out, most likely we go into one of the extremes. Might see deflation first. Some make that argument that we'll see deflationary periods first. But as the government keeps monetary policy accommodative and continues stimulus, it could result in high inflation. If there is no consumer price inflation, there could be asset price inflation. That's an important distinction. When describing what will keep gold supported this year despite the growing risk on sentiment, Artigas highlighted four primary drivers: economic expansion, risk and uncertainty, opportunity cost, and momentum. Many investors forget that gold has a dual nature. We've talked about silver as having a dual nature, but gold's dual nature is as follows: investment side and consumer side, said Artigas. There are positive links between a significant portion of gold demand and economic expansion. Periods of economic recovery tend to benefit consumer demand. As the economy recovers, consumer demand will start to be more supportive. Takes away one headwind for gold. This year, aside from economic growth, there will be low interest rates, more government stimulus, growing deficits, and more risk, Artigas added. Interest rates are not likely to increase anytime soon. You've heard me talk about analysts think that it's going to be at least until 2023, probably the end of that year, before they even consider it. That means the opportunity cost of holding gold is very small or non-existent, which is supportive of investment demand. Rising valuations of U.S. equities are also a possible driver of gold this year, as many metrics point to extremely high valuation levels. Speaking of extremely high, I had an extremely high urge to sneeze right before that sentence, but I resisted the urge, so you didn't hear a sneeze. You wouldn't have known about it had I not mentioned it. If the fundamentals don't catch up with valuations, they might come down. It's still early in the economic recovery cycle. Investors at present are aware by having stocks and equities, alternatives, and some other assets. They are increasing risk, and they need to manage that risk. Given that bonds at present don't look as attractive, gold becomes an alternative. And that's just it. As people do start to invest on economic growth, they may diversify their portfolios into gold, especially if the price is right. And that will essentially really drive the price up, which is why most of us feel that gold is going to do fairly well this year and hang on to probably prices $1,850 and higher. And that's where it's sitting right now, around $1,850. The World Gold Council also noted a political driver that will likely benefit gold this year. Historically, periods where there has been a Democratic president, combined with the majority in the Senate and House, gold has tended to perform well. There is a perspective that some policies may create higher deficits, increase in money supply, and create inflationary pressure. Although I would make the argument, as a conservative and a Republican, that Republicans and conservatives have certainly created higher deficits, increased the money supply, and create inflationary pressure. It's a bipartisan issue here, and we saw a lot of it last year. On top of everything, there is a layer of the unknown, which could reveal some long-term problems as global economies begin to recover from the COVID-19 pandemic. When the global financial crisis happened, economic recovery started in 2009. However, it was not until 2010 that suddenly the aftermath resulted in a crisis in Europe. Pressures built up, and we had unintended consequences, he said. Indeed, vaccine news is creating a positive momentum, but we won't know if there are problems down the line until time passes. And boy, that's true. We've not seen the real effects of what we're doing and what we did last year into this year. And I think that we'll have some problems. In fact, I would make the argument that we really have not seen the effects of what happened in 2011 through 2013 and earlier with the TARP, with money printing, quantitative easings round 1 through 3. A lot of stuff that has contributed that I don't think has really come home to roost yet. The chickens are still out there, and they are running around with their heads still on, but they will come home to roost sometime, and with or without heads at some point. And this is why we hold gold. Gold especially is the ultimate safe haven. And during a deflationary period, prices of gold go down along with other commodities. They won't go down as much as other areas or other things out there, other commodities, and especially goods and services that may be considered ideal. And so I think gold provides a good safe haven in both, which is why I say that gold is a safe haven against economic instability, no matter what form that takes. And this article here, I believe, pointed out some various different scenarios that it could take, even in times of a pseudo-economic recovery, because really that's what it is. It's a pseudo-economic recovery based off money that's diluted. It's diluted money that's flowing out there. There's something to be said for the fiat dollar. I certainly don't want to minimize that because I believe in it. We believe in it. We all believe in it, no matter what. But it is destroyed. It's destroying itself with a population of more of those dollars that are out there. Fiat destruction. There's a channel named after that very concept. And it is something that we should take into account, and this is why we hold gold. It's the ultimate form of money, recognized around the whole world, and spanning thousands of years. Thousands of years, gold has stood the test of time. It has stood the test of empires, wars, regimes, dictatorships, democracies. It's survived it all. Terrorist organizations, that's right. I've covered that on this channel as well. And this is why, folks, that gold especially has been my focus since 2017. But I believed in it before 2017. I always felt it was good to have some. But in 2017, I started to really shift my focus into gold. And I think it's incumbent on most of us to consider it, especially if you are into silver. And given the volatility of silver and where it is, and even though I'm bullish on silver for the year ahead, I believe that gold provides the ultimate stability. It's a great place to park your money. Be your own central bank. Get you some gold, as Belang P says. So there you have it. I hope you found this video interesting, insightful, and even entertaining at times. So there you have it. I'd like to extend a multitude of gratitude to you all and encourage you to please rate. Yes, I do want you to really rate this video. Put a little thumb up on it if you don't mind. Even if you don't like it, put a thumb up on it. You know, let's see if we can get one video that has no thumbs down on it. That would be kind of cool. And share it with your friends and neighbors, with your unborn children. Share it with your grandmothers. Share it with the ant farms in the community. Share it with, inanimate objects. I'm not opposed to sharing this video with inanimate objects. Comment! Yep, go ahead and post a comment below. And to see if you watched to the very end of this video, I want you to post this in the comment section. You interpret that as you will. And after all of that, if you haven't already, stay subscribed or subscribe.